In this video, you are going to master everything about support and resistance level. You are going to know what support and resistance level is, and you are going to understand the importance of support and resistance level and how it is being implemented on a price chart. Support and resistance level is very important in technical analysis. In fact, support and resistance is the foundation of all technical analysis and price action, because everything about trading revolves around support and resistance. In other words, you can also refer to support and resistance as supply and demand. So if you can master support and resistance level, you will be able to trade the forex market profitably, whether you are an option trader, crypto trader, stock trader, commodity trader, or forex trader. Support and resistance level still remain the number one key component in price action. So I want you to sit tight and watch this video from the beginning to the end, so that you will understand what this video is talking about. So what is support and resistance level? First, let us look at support. Support can be referred to as a floor where price cannot break through, while resistance level refers to a ceiling where price cannot break through, right? So it's like a floor and a ceiling where price cannot break through, right? So whenever you notice a price chart where a particular level is finding it difficult to break through, that level acts as either a support or a resistance level, depending on where the level is. If a price goes up and couldn't break above and then return down, that level where price got to and reverse is a resistance level. And if a price goes down and couldn't go again and reverse and start heading up, that level where price reverse from becomes what? A support level. So that is why we say support and resistance level act like a ceiling and a floor where price cannot be able to break through. So if you truly want to master support and resistance level, then there are two things you should take into consideration. We have the bounce and the break. So if you want to focus your trading strategy on support and resistance level, there are two things you should be looking at, which is trade the bounce or trade the breakout. So what do you mean by trading the bounce or trading the breakout? Trading the bounce means when the price gets to the resistance level and then got rejected, right? You cannot trade the bounce. But if the trade gets to the resistance level and breaks above it, then you cannot trade the break. So that is why, as a support and resistance trader, you either trade the breakout or you trade the bounce. So you have two things to take into consideration. And looking at support and resistance level, there are few tools that you can use to identify support and resistance level. First, we have the horizontal line. You can use the horizontal line above to identify a resistance level, and you can use a horizontal line below to identify a support level. And also you can also use a trend line, right, to identify a diagonal support and resistance level. You only use the trend line when the price is clearly in a trend. That is when you can use the trend line to identify either the support or the resistance level. Also, you can use a price channel. A channel is a two trend line that connects the high and the low. You can also use a price channel to identify support and resistance level during a trend. And also you can use the moving average to identify a dynamic support and resistance level. So the moving average acts as a dynamic support and resistance level during a trend. The same thing applicable to the trend line. The trend line acts as support and resistance level during a trend, whereas you can use the horizontal line to identify support and resistance level during a ranging market. And bear it at the back of your mind that whenever price breaks above a resistance level, that resistance level tends to become what? A support level. And when price breaks below a support level, that support level tends to become a resistance level. And that is how it works. So I'm going to walk you through a practical way of how you can trade using the support and resistance level so that you can understand this video very well. Now, if you look clearly on this chart that I'm showing you, if you look clearly on this chart, you can see that the trend is up. So that is why we have the highs and the lows, the highs and the lows, the highs and the lows. So the highs act as a resistance level while the lows act as a support level. So that is why I said whenever price reverses from that point becomes an area of value. So for the fact that the price reverses from this point now becomes a resistance level, and when price reverses from this point now becomes a support level. So this point now becomes an area of value where buyers and sellers are looking at. The sellers are looking at the resistance level while the buyers are looking at the support level. So that is why support and resistance level is very important in price action. You also need to understand that there is minor and major support and resistance level. A minor support or resistance level is a level that is not strong. It can be broken. That level is not strong. That is why I call it a minor support or resistance level. Why a major support and resistance level is a level that is very strong, where price has tested so many times but could not break through it. That becomes a major support or resistance level. So any level where price gets to 2 times or 3 times or 4 times and can't break through it, that level becomes a major support or resistance level. So if you look clearly on this chart, you can see that we have several minor resistance level, right? If you watch here, you can see that this is a minor resistance level because the price tested it only once and break above it. We also have another minor resistance level here, right? You can see that the price tested it 1, 2 and then broke above it. We also have another minor support level here. You can see that the price tested it only once and then has not returned back there again. Then we also have minor support level. You can see that price tested it once and then broke below it. Then we also have another minor support level here. You can see that price tested it once and hasn't gotten to the level again. But when we talk of major resistance or support level, is a strong level where price has tested so many times but could not break above or below it. Like now, this is clearly a major resistance level. You can see that price has tested it so many times but could not break above it. So this is a strong level, right? So you can see that price tested it here, tested it here, tested it here, and also tested it here but could not break above it. So this now becomes a major resistance level where price could not break through. And if you check, you see that this is the highest high, right? You can clearly see that this is the highest high of the trend, and yet price could not break above it. We have this resistance level. You can clearly see that the price has broken above it. right? But this level still remains a strong resistance level where price could not break through, right? So any level where price has tested so many times but could not break through that level acts as what? A strong or a major resistance level or support level. So you can clearly see that this is clearly a strong support level because this is the lowest low where price got to but could not break below. You can see that price got to this level, tested it here, and then continued heading up. And since then, you can see that the price has not been able to approach this level, right? You can see that the price tested it here, and here, but couldn't break below it. So this level becomes a strong support level because price could not break below it. So that is how you trade. You need to understand the strong and the minor support and resistance level so that you can focus on the major support and resistance level, because the major support and resistance level will hold strong. It will tell you that the level is strong, right? So you can be able to trade the bounce very well. So this one is what we call a channel. A channel is where you draw two trend lines at the highs and the low to form a channel. Now the trend is clearly in a downtrend and we have two trend line, the ones in the resistance level and the ones at the support level. So the essence of using a channel, a price channel, is for you to be able to identify support and resistance level. And like I said, any level where price gets to and reverse from that level becomes a resistance or a support level. Now you can see that the price is clearly in a downtrend. Now the price gets to this level, this up channel acts as a resistance level, and what happened? The price gets rejected and then went down to to this channel at the lows. So this channel at the lows acts as a support level, and what happened? The price now gets rejected and went up again to the upper channel. So this now acts as an area of value, right? This lower channel acts as a support level, while this higher channel acts as a resistance level. So for those that want to have a target, right, a take profit target, they can easily take their profit when the price gets to the lower channel, right? Because this is clearly a downtrend. So when they place their sell trade at the upper resistance level, at the upper channel, they can simply take their profit when the price gets to the lower channel, because the channel now acts as what? A support and resistance level. That is why we call it a channel. So this is very important. The next thing we have here is the horizontal support and resistance level. So the horizontal support and resistance level works during a ranging market. You can either use a rectangle or you can use a horizontal line to map the levels, the support and resistance level. So this works during a ranging market, right? You know, sometimes the market can be in an uptrend, in a downtrend, or ranging, right? So if the market is in an uptrend or downtrend, you can simply use a trend line to connect the highs and the lows, right? But if the market is clearly in a range or sideways, you can then use a horizontal line or a rectangle line to map the lows and the highs, right? So this is an example of a ranging market, right? You can clearly see this is a support level and this is a resistance level, right? So like I told you in my previous videos, support level is not just a line, it's a zone, right? It's a zone. So that is why some traders do use the rectangle line, because it is a zone. Sometimes if you draw a line, price might not get to the line. So that is why using a rectangle line to map out support and resistance level is more preferable by some traders, because if you use just a single line like a horizontal line and draw the support, the price might not get to that line and then reverse. So that is why some traders do use the rectangle line, because support and resistance level is acting like a zone, not just a line. It's acting like a level, right? So this is clearly a support level and this is clearly a resistance level. So when price gets to the support level, the buyer step in and then push the price up. And when price gets to the resistance level, the seller step in and push the price down. So that is why in a ranging market, both the buyers and the sellers are clearly in equilibrium. They are exchanging price. The buyers are buying at the support level while the sellers are selling at the resistance level. So this is how you trade using the horizontal support and resistance level. Now, like I told you in my previous video, that when a support level is broken, that support level automatically becomes what? A resistance level. So this is clearly a downtrend, right? You can see that the price is making lower high and lower low, lower high and lower low. So what happened? You can see that each time price breaks below the support level, that support level tends to become a resistance level. So this is clearly a support level, right? You can see that the price tested it once, tested it twice, and then broke below it. And then what happened? The price now came back to test the support level, which has automatically become a resistance level, right? So price tested it and then went down again. And then look at this level again. This was previously a support level where price could not break through because price tested it and went up, and then finally price broke below it. And what happened? Price went back again to test the support level, which has become what? A resistance level. The same thing is applicable here. This is clearly a support level because price could not break below it. You can see that price got to this level, was unable to break below it, and when the price finally broke below it, the price came back to test the level right before going down. So that is why I always told you that whenever a support level is broken, that support level tends to become a resistance level, and when a resistance level is broken, that resistance level tends to become what? A support level. So this is how you trade the support and resistance level. Like I told you in my previous video, the moving average can also act as a support and resistance level, right? In a trending market, you can simply use the moving average. So the moving average acts as what? A dynamic support and resistance level. So if you look at this chart clearly, you can see that the moving average is now acting as what? A support level. You can see that the price is finding it difficult to break below the moving average. That is why whenever price gets to the moving average, it gets rejected, right? You can see that the price went up, came to the moving average, and what happened? The buyer stepped in and then pushed the price up. The price now came to the moving average again, the buyers came in again and pushed the price up. So you can clearly see that whenever price gets to the moving average, the buyers step in and push the price up. So that is why I say the moving average can also act as a dynamic support and resistance level. So this one is clearly an uptrend. That is why the moving average is acting as a support level. But if the market is in a downtrend, then the moving average will be acting as what? The moving average will be acting as a resistance level. So that is why I said you can also use the moving average to act as what? Support and resistance level during a trending market. Then you can also use a trend line. Like I told you, you can use a single trend line to act as a support or resistance level. The previous one I showed you was a channel where you use two trend line to connect the highs and the lows, but this one you use only one single trend line, right, to connect the lows if the market is in an uptrend, or connect the highs if the market is in a downtrend. So if you watch clearly, you see that the price is in an uptrend. That is why we are using the trend line as an area of value. So the trend line here is acting as a support level. That is why whenever price gets to the trend line, it gets rejected. That is the bounce we are talking about. So whenever price gets to the trend line, it gets rejected. When price gets to the trend line, it gets rejected until the price breaks below the trend line. That is when a new trend begins. So that is why we say trading support and resistance level means you are trading the bounce and the breakthrough or the breakout. So if the price has not been able to break below the trend line, it means you are making use of the bounce, because whenever the price gets to the trend line, it gets rejected. That is bounce, right? The price comes to the trend line, it bounces off the trend line. The price comes to the trend line again, it bounces off the trend line. So you are trading the bounce now. But if the price gets to the trend line and break through the trend line, then you are trading the breakout, right? So that is why as a support and resistance trader, you are either trading the bounce or the breakout. So these are the two things you are looking at as a support and resistance trader. So this is all you need to become a successful support and resistance trader. And like I said, support and resistance is also a strategy that you can master. And once you master support and resistance level, then you can include other technical analysis like candlestick pattern to cement your trading strategy. So my advice to you guys is to go to your demo account and backtest this support and resistance level that we have just treated. Backtest it in your demo account, and if you are 100% sure it is working for you, then you can implement it in your live account. So ladies and gentlemen, that is all I have for you in today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to this channel for more educative content like this, and also don't forget to turn on the notification icon to be notified whenever I publish new content. I will see you again in my next update. Bye.